Oil prices 31-month highs today. Crude capping its longest run of monthly increases we have seen since 1983. And oil is not the only thing going up. Commodity prices in general have been skyrocketing, making everything from cereal to gold to pasta to tortillas more expensive. And one of the reasons why is because of what is known, or at least one of the assertions for why, is something known as securitization, essentially Wall Street's creation of commodities-based investment products that you can buy and sell like a stock, whether you have any interest in ever using the oil or the corn as long as you live. It has been an advised trade to retail and institutional investors for years now as a way to protect yourself from quantitative easing and risk to our currency. Except when the prices for these new securities go up, they send everything from coffee to oil prices up too, and in the end, consumers wind up paying higher prices for things that are not like a bubble in Apple stock or Google stock, but something that is of vital national interest, in this case, oil. It is something commodities regulators have been looking at closely, which brings us to today's specialist. Bart Chilton is a commissioner at the Commodities Futures Trading Commission. And Mr. Chilton, it's a pleasure to have the opportunity to talk to you. What do you believe the impact would be of restricting financial instruments that allow people to purchase commodity exposures that have no intention of ever using that commodity?
Yeah, thanks, Dylan. You're absolutely right. I mean, these folks that have no business interest in the underlying physical commodity, whether or not it's crude oil or corn or wheat or coffee, have been pushing the prices sort of out of bounds. And it's not just the securitization of these. It's actually traders who are in these futures markets. They've shifted their money from the securities into the futures at rates that have just been blistering.
Yeah.
And so I think they are actually pushing prices up to some extent.
Well, Bernie Sanders came out today saying, and I'll quote, "There's mounting evidence that skyrocketing price of gas and oil has nothing to do with the fundamentals of supply and demand and has everything to do with Wall Street firms that are artificially jacking up the price of oil in the energy futures market." Do you agree with that statement? And do you agree that it is worthwhile considering restrictions on financial speculators' ability to purchase mission-critical commodities?
Yeah, well, Senator Sanders has been a leader on these sorts of issues. I don't think the speculators, Dylan, have their foot on the pedal and they're on cruise control for gas prices. But I think they tap the gas pedal, so I think it goes beyond the normal rates. I think every time somebody fills up right now, they're paying a speculative premium, sort of a Wall Street speculative premium of several dollars for every tank of gas. And we have the ability. Congress gave us the tools as part of this big regulatory reform bill to actually put limits on these speculators. But unfortunately, we haven't been able to do that yet, and it's time we do.
So what's actually stopping, Commissioner, this is Rob Cox speaking. I'm just wondering what's actually stopping you guys at the CFTC from imposing whether, the higher margin requirements, say, that were granted to you as part of the Dodd-Frank bill?
Well, if it was a dictatorship at these commissions, and I was the guy, it would be done. But, there's 5 commissioners, Rob, and it takes 3 of them. But just recently, matter of fact, your news organization, Reuters, said that based upon some Goldman Sachs information, that up to $20 a barrel is a speculative premium, which was very good reporting, by the way. But even Goldman Sachs, one of the larger speculators, is suggesting that there's an impact from speculative interest.
Crystal, go ahead.
Sure. Hey, Bart, this is Crystal Ball.
Hey, Crystal.
Obviously we saw earlier in this program, we've been watching closely everything that's going on in the Middle East. We also see rising demand in China and India. How much of rising oil prices are legitimate demand and supply issues? How much of it is speculation?
Well, again, I think several dollars for every time somebody fills up. Rob's colleague at Reuters said $20 based upon this Goldman Sachs information. But I think the mistake that people make all too often, Crystal, is putting it in black and white terms, saying that speculators are behind all of it. Obviously, as Dylan's looked at these markets for so many years, supply and demand have a lot to do with it. There's sort of a fear factor or a risk factor over there in North Africa and the Middle East. But we have high supply. We have fairly stagnant and not high demand whatsoever. So these concerns that we have over there have to be, the prices have to be being pushed somehow. And speculators really is what's left. And what these guys do is they put the money in and they go long in the market. And they have no interest in getting these commodities, Crystal, and they have no interest in going short. They are long.
Go ahead.
Commissioner Jami Floyd here. What can consumers do, who are ultimately the ones paying the price, to push back against this and begin to have some of those congressional limits enforced?
Well, in the meantime, shouldn't they also buy some commodity funds that we would to hedge their gas price?
Yeah, I want to stay away from that.
Yeah. First they should short them. That's not my question. That's his question.
The bottom line is these limits are limits that can be in place now. My colleagues don't agree we need it. They've said, and I can't speak for them, but they've said publicly we need more data. I think the data is knocking hard at the door and yelling at us to do something about it, and we should do it right away.
Very, very quickly, the argument that quantitative easing has been a motive to buy commodities has been around for a couple of years. You can see a pretty good correlation between the new money that's been printed and obviously commodities. A barrel of oil is always a barrel of oil, no matter what a dollar is worth. Right. Don't we have to acknowledge the rational nature of the movement of money to commodities in response to the central bank policy?
Absolutely, Dylan. Again, I think, all too often people want to make it black and white, and I think that has something to do with it also. But excessive speculation. Look, if we don't have speculators in these markets, there's no market at all. Excessive speculation is something we can and should deal with right away.
Understood. Listen, Commissioner, a real pleasure to have the conversation. Thank you very much, and thanks to you guys. Rob Cox, Crystal Ball, Jami Floyd, a pleasure. Enjoy your weekends.
Thank you, too.
And I want to find out what Donald Trump was saying in that bleep. I'll be spending my entire weekend.
Off camera, I'll tell you.
Okay, you figured it out. Really? Okay.